Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Manpreet and welcome to Cut to the Chase. Now some of you might know that the Bavarian Alps are amongst one of my favorite places to travel. Besides the stunning natural scenery, for road trip enthusiasts like myself, they offer very good driving roads and are crucially close to the automotive hubs of Munich and Stuttgart, from where you can rent some suitably rapid vehicles. Now, while I can think of several Swiss, Austrian, and Italian friends and colleagues who would disagree with me, this is nevertheless where G7 leaders spent their working weekend and is one of the major events we're watching in the week ahead. So, to start sort of looking over the next few days, let's start with the G7 meeting itself. The first takeaway from the meeting so far is a pledge to ban imports of Russian gold. This is significant because Russia is the world's second largest gold producer, counting for about 10% of global gold output. So on its own, it's arguably a positive for gold, which we continue to see as a preferred asset class, though we'd emphasize financial demand for gold may continue to be an equally, if not sometimes more important factor. A more controversial point under discussion is a proposal to cap the price of Russian oil exports. While a rising number of countries appear to be in alignment with this proposal, its impact on oil prices remains far from clear. Several industry leaders warn that a Russian retaliation in the form of reduced supply could still cause prices to rise, and there remain much debate on how precisely such a measure would be implemented. Now, we remain of the view that oil prices will remain elevated in the $115 to $120 range, but the details of proposed measures and the risk of any Russian retaliation is something we'd watch closely in the coming week. Now, moving beyond the G7, the second thing we'd watch, of course, is the economic calendar, which is moderate for the week. In the US, bond markets are scheduled to close early ahead of the July 4th long weekend. But before that, we have both PCE inflation, which some of you might recall is one of the Fed's preferred inflation measures, and the ISM manufacturing index, both due. Now, Fed Chair Powell is also scheduled to speak at the ECB forum on Wednesday, though we'd argue new policy guidance is relatively unlikely, given we've already heard his testimony to Congress and the Fed policy decision itself over the past 2 weeks. Now, elsewhere, the key data release for Europe is likely to be CPI inflation. Consensus is looking for a rise to 8.3%, which could trigger market expectations of tighter ECB policy ahead of its meeting in late July. China also releases official and unofficial PMI indices of economic activity. While expectations are for a further rise from last month, the key question is whether they will cross back above the 50 mark, separating expansion from contraction. We'll also keep a close watch on South Korean trade data, given it tends to be one bellwether for global trade, as well as the state of US and Chinese economies. Finally, equity markets remain at an interesting level. The S&P 500 had a strong rebound last week, but a technical chartist would argue this has only brought it back to about the 3,900 level, which is now a key level of technical resistance. Now, many technical analysts are arguing that US equities appear oversold based on several major technical indicators, which argues the rebound could extend this week in the absence of any new bad news. However, a rebound based on oversold conditions alone tells us a little about the long-term trend, especially with the focus likely to return to earnings next month. So against this backdrop, one of our key new investment ideas for the second half of 2022 is to add further to bonds at the expense of equities. And we may get opportunities to do so this week if equities do extend their rebound further. Have a listen to Friday's Through the Noise podcast for more on our second half views if you haven't done so already. But with that, we'll take a pause here. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening and wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.